a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about bank ETFs, which have been doing really well this year. So let me share my slide. The financials is actually one of the best performing sectors year to date. It is up 6.4%, just slightly behind communication services, which is the best performing. Communication services up about 6.6% year to date. And big banks that reported results recently, the results were quite good, really good results. Most of them, they beat on the top and bottom lines, and management commentary was generally positive. And the outlook for these banks remains positive because we know that inflation is expected to remain slightly sticky. So we should see slower interest rate cuts this year, which are actually good for banks because they benefit from slightly higher rate, not too high, but slightly higher rates, and a steep yield curve. So, and according to Zacks earnings trend, the Q4 earnings for the financials, they are expected to be up 22.6% year over year. Excellent earnings growth. And that is why these stocks have been doing well. But the biggest reason why the outlook for banks looks quite good, particularly bigger banks, is hopes for deregulation. So we know that Biden administration, they had pushed an aggressive regulatory agenda and banks did not like that. And the Trump administration is expected to ease regulatory scrutiny for banks, and that could result in more mergers. And deregulatory agenda in general could also result in more mergers and more IPOs, which is again going to be good for banks. And after Trump's victory, JP Morgan CEO said that many bankers were dancing in the street. So that reveals the hopes that these banks have from the regulatory agenda of the new administration. And we have seen, because of these trade and tariff concerns, the market has been quite volatile. Stocks have seen choppy trading activity, and in general, higher volatility results in more trading, and more trading is good for banks in general. And last but not the least, these banks are still trading at very attractive valuations, even though they have done quite well over the past year or so. The financial sector ETF, a SPDR ETF, that is currently trading at a forward earnings multiple of 17.5 times compared to 23.4 times for the S&P 500 index. Now, I'm going to highlight three ETFs, bank ETFs, which are quite different from one another. So let's take a look at these ETFs. The first one I'm highlighting is the biggest in the space, the financial sector. Select SPDR Fund XLF. And as the name suggests, it holds the financial stocks within the S&P 500, market cap weighted. 73 holdings. It has 54 billion in assets, ultra cheap expense ratio of 8 basis points. If you want to learn more about this ETF, you can go to the quote page on Zacks.com, read our research report, articles, and using the link, you can go to State Street webpage for this ETF, and you will see that Berkshire Hathaway is the top holding in this ETF, accounting for 12% of the portfolio. And then you see other big banks and finance companies so you will see JP Morgan, Bank of America, Wells Fargo, as well as other financial companies, fintech companies, Visa and MasterCard in the portfolio. You will see that this is the sector allocation. You see financial services about 32%, and capital markets, other sectors, subsectors within the financial sector. The second ETF that I'm highlighting is by Invesco. And this is the top performing of the three that I'm highlighting. This has done quite well because of its focus on money center banks, a lot of money center banks, which have done quite well, and also regional banks, thrift institutions. And this has more concentrated portfolios, just 25 holdings compared to 73 holdings for XLF. So the Invesco KBW Bank ETF, the ticker symbol is KBW. But much smaller compared to XLF, 3.6 billion in assets, and also a little more expensive, even though 35 basis points is a reasonable expense ratio for slightly different kind of exposure. So let's see what this ETF holds. And again, you can use the link to go to Invesco webpage for this ETF, and this you can see what exactly it does. So it large money center banks, regional banks, and thrift institutions in the US. If you look at the portfolio, you will see that JP Morgan, Goldman Sachs, Morgan Stanley, Wells Fargo, Bank of America, Citigroup. These are the top holdings in this ETF. So among the top holdings, you do not see Berkshire compared to XLF. If you compare to XLF, you do not see the likes of Berkshire, Visa, and MasterCard. The third that I'm highlighting is, again, quite different because this focuses on the US regional banks. So if you believe that regional banks, the smaller banks, are going to do very well if the economy picks up and the yield curve steepens, then these banks could do quite well. And this has an equal weighted portfolio at the time of rebalancing. All banks brought to equal weight. Diversified portfolio of 140 holdings, and this has the same expense ratio and 5.2 billion in assets, same expense ratio as KBWB. The ticker symbol is KE. Again, let's take a look at this ETF. If you look at the holdings, you will see important regional banks like Truist, Citizens, and Huntington Regions, First Horizon. These are the top holdings in this ETF, and at the time of rebalancing, they will all be brought to equal weights. On the last slide, I have the comparative performance versus the S&P 500 index. The Invesco product, because of its focus on big money center banks, has done quite well, and it is up 51% over the past year. Then the regional bank ETF is up about 41%. The broader XLF ETF is up about 34%, whereas the S&P 500 index is up about 23% over the past year. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.